Hello everyone, welcome to another weekly market review. Today is the 1st of June 2020. We have printed a new weekly and a monthly candle on the same day. It's a great time to be charting on higher time frames. Let's look at what's going on. So looking at the total market cap on the monthly, and you can see that this month of May we have had a great monthly close. The big move we had at the starting of the year in February, we have closed higher than that, and we have also closed higher than this monthly resistance level from July 2018. So this is a very positive monthly close for the total market cap chart, and I think there is no other way to look at this than being bullish. If we look at monthly time frames, the next big resistance level is this quarterly resistance at 300 billion, which is almost 20% away from where we are. So on the total market cap chart, I would say this is where it is the clearest that we are in very strong market conditions for bulls, and essentially the plan should be to watch the market, and we will formulate a plan for how we should be looking at trading BTC and trying to remain into this market for the moves that are to come. Let's quickly look at the weekly. So we have had essentially since the end of April, which we've had the big move that we had for BTC. I think we hit about 9400. Since then we have pretty much been in a sideways consolidation. It is only the beginning of the week, so we cannot judge anything from where the current candle is, though you see you're starting here, so it starts to look bullish, so we do have to see that the open for the week is of course slightly higher than what we've had before. So that is again a very positive note, but you have to understand that for now, just looking at the weekly time frames, all we can reflect is that we have been going sideways for the month of May, which, considering the kind of retraces we do have, does look like a positive consolidation until proven otherwise. So as far as strong levels go, currently we are trying to flip this big monthly level. So let's look at the daily chart. So yeah, currently we're trying to flip this 258 level as support. We've had a couple of sell-offs into it, and you can see that price is holding. So what I would say is that we've had this big move from the bottom, which was this monthly level, and we've had quite a shallow retrace. We've had a 382 retrace of this move. So what we have to see is that whether price can hold this level, and if we can get another retest of it and price begins to hold it and get some kind of a rounding pattern, then we can say that yes, we are ready to continue this move up, and we are going to base your trade off possibly these levels somewhere here about 255. You can base your trade off of these lows and take a continuation trade for the long side in case you're not already in. On the other hand, if we do lose this level, start to turn it into resistance, then the game plan would be to be patient and allow price to then come down, because it would mean that we are printing somewhat of a different shape. For now, this does look like quite a steep ascending triangle if you look at it. So on the total market cap chart, essentially, let's just go to the 4-hour, because that's where it will be much cleaner to draw. So you can see on the 4-hour time frame, we can still roughly print out, though you can see that this for now is a bit dangerous because we have taken out all these levels. So if price does not get back above here, this is a liquidity grab on the total market cap chart, which would then reflect that we have to go to the next levels of liquidity, and where those are these lows here and these lows here, so we have to be careful about this, because you cannot see this on BTC and you can't see it on any other chart except the total market cap chart. So what most people are looking at is the ascending triangle on BTC, and generally what I would say is that whenever personally I am looking at ascending triangles, I like this angle to be a bit more gradual, because that is when it looks like the consolidation has not been so aggressive. Because if the consolidation generally becomes this aggressive, there is a possibility of a bull trap, and you can see with this liquidity grab that we have had, the potential for that opens up. So I would say, if you're not already long, you should wait for this retrace. Watch if price is going to either find support here or on this very steep trend line, which does look dangerous. But if we are looking at liquidity theory, we have taken the liquidity here, so the better trade for me, essentially for upside, would be if price can start to trade up here, because then for BTC that would mean somewhere around the 9800 9850 level, which could then open up a breakout trade for higher levels. Because we do know for BTC, this 9800 9900 level, they are exhausted. We spoke about it in last week's review as well. So for the upside, I would say at these levels a breakout trade is what is more plausible and a higher probability where it would be safe. For now, on the total market cap chart, this looks like a liquidity grab, so I would say essentially price would want to go to the next area of liquidity, which is down here. So you can watch this. I would say that if we do come down here, price respects this and comes back up above, and you can find support, you can manage your risk for upside, because you do know on the monthly time frame price action is very positive. So this would support price, and we end up looking at higher levels. Essentially, first this weekly level of 280, but more importantly this quarterly level of 300 billion would open up to be tested. So that would be the plan for the total market cap chart. Most ideally, if this trade for price to come down here is crowded, I would say that we still have this possibility of shaking out and coming to catch either this or this liquidity level. So be aware of that. I would say watch for the liquidity levels for the long side, and catch a breakout trade if you are looking for further upside. If you look at the altcoin market cap chart, you can see quite a different picture, because we've had a significant monthly close, essentially almost 8 to 9% higher than the previous monthly resistance level that we created in February. Because in February what happened was we did break much higher. We ended up testing this quarterly level of about 110 billion. We went all the way to 115 billion, but we had a very bearish monthly close. This was on high volume, but you can see that we have very well built this monthly level, about 75 billion, as support. We have held it very well, and this monthly candle is decent. It has closed above it, but what we have to see is that the most evident support we have is this level again, which is close to 10% lower. So if price does have to continue, yes, we do have this 96 billion to 100 billion psychological level for the altcoin market cap before we get to the 108 quarterly level. So let's look at the weekly chart. We had this this was a big cluster for the weekly chart, the weekly time frame, and you can see that we are still below it. On the weekly time frame. Essentially, we have not broken above and found support because you can see rather than being a stronger resistance level, this is quite a strong support level once price does end up breaking and closing above it. So currently on the weekly time frame, I think the most recent moves for the total market cap has been the large caps, essentially Ethereum, which has been doing really well and which is essentially pulling this chart up along with it and the total market cap chart, because BTC has essentially been moving sideways. So this is pretty significant that currently we are still trading below this. I would say to watch this pretty carefully, and if we can start closing above this 90 billion level, we can know that this is set to continue, and we can trade it up all the way to the monthly levels and essentially all the way to this quarterly level. So again, price is looking strong. It was lagging initially, this chart, to BTC, and most recently, because BTC has been going sideways, a lot of alt BTC pairs are getting good attention and there have been some good plays, and so you can see that it is reflecting on the altcoin market cap chart while BTC is sideways, getting that slight attention. Nonetheless, it is not absolutely impulsive, and you can see the first major resistance level we have is still holding as resistance. So be aware of that. If we do start to get a pullback, this 82 billion level is essential, and if this does not hold, then it is most likely we can end up coming all the way back down to the 73 billion level for price to trade within this range before, and building some kind of structure before we start moving. This is still very legitimate. Let's look at it on the daily time frame. This is still a very legitimate structure. You can see that the one that we have broken out of, and we are currently holding it very well. So this chart is showing a lot of positivity. If you look at it on an even lower time frame, let's just quickly look at it on the 4-hour. This does look like a complex inverted head and shoulders. The target for this is still much higher, all the way close to 100 billion. So do keep a lookout for that. So this is a legitimate consolidation that we have broken out of. What would be bullish is if we can get another retest and hold this, or build some kind of a flag here which would reflect continuation. If we can build a bull flag consolidation over here, we should be looking to expect some kind of continuation. And on the other hand, if price does end up breaking below this neckline support of 85 billion, then I would say that is not bullish. It would count as a false breakout, and we should be looking at lower levels of support, essentially at least close to this 80 billion where we held up for quite a long time. So on the daily time frame, this is a significant level, and you can see it even on the 4-hour how significant it is. So this 80 billion level, essentially, if this is taken out, would get tested, and you should be looking to aggressively see price turning from here, and you can manage your risk from this level. But if we get a strong liquidity grab and a reclaim of this level, you can again be looking for upside, because on the higher time frames, the monthly and the weekly charts, this is very positive. The crypto market is proving itself to be bullish, and it is that way until it's proven up. So we're having a quick look at large caps against BTC, and we were mentioning that this bounce, even the last couple of weeks, we have been expecting also against BTC to continue this bounce as long as BTC is carrying on sideways. So that has what has happened. This monthly level on large caps against BTC, you can see it is a very strong level, all the way from where this monthly level is still essentially where we turned around at the end of April. I think this is a strong resistance zone. We have printed a candle which on the daily time frame, which does not look that good, but essentially what we can still expect is that still a lot of individual pairs can continue to rally and can continue whatever moves they have made, so we've had a lot of odds perform very well against BTC. We did post about 5 altcoins on our Subverto Twitter, and most of them have done very, very well. Especially Theta, we got more than 200% gains on that coin. We ended up making new all-time highs on a significant mid-cap coin against BTC after quite a long time. So that was something nice to see and experience. Essentially, even a coin like Theta, even though there was the fact that it got listed on margin exchanges, that the coin got absolutely decimated. But we've had good rotation, and essentially the money has been flowing from whatever moves initially we've had into BTC. The money has been flowing into alts. That means the market makers are currently beginning to accumulate and aggressively beginning to accumulate the coins that they are interested in. So, which is again very positive for crypto for the longer term. And if you watch the last review, the plan remains the same, to remain cautious on all BTC pairs. But while BTC is sideways, we can carry on trading them. And the expectation is that if BTC begins to make its big move out of this 9,800 resistance, all BTC is going to take a big hit, and the money will all flow back into BTC, at least till price can be testing and breaking all-time highs. And I mean, we only have one sample size before this for this, but it makes logical sense. I have spoken about this in great length in the previous review, so I will not do it again. But for alt BTC, again, we are at major resistance, this monthly level. You can see how many times we got rejected from this level here before. Even when we came all the way down, we were rejected at this same monthly level. So I think this is a very significant level. We have currently gotten rejected by it. You should be watching it. Even if we turn it into support, we do have this higher level over here, which is again resistance. And what I would say is once this level turns into support, that is when we should be looking. This would be very, very positive for odds against BTC pairs, and then we should be looking at much higher levels. For now, this should just essentially be a bounce to either here if we go higher over here, before we start to correct again and all the money flows back into BTC. So BTC, this was the fractal that we were looking at last time, and you can see that it has manifested very well. Essentially, this is the part of the fractal that we would be in now, which would mean that we would continue to go about sideways, possibly with a few retests of lower levels, but essentially there would be enough demand to not only hold this level but get a decent breakout out of this. So this is the 2016 the end of 2015 breakout of BTC from the big consolidation. We consolidated at resistance, we were rejected, and we did not make any lower lows, and essentially there was just enough demand to continue to test this resistance and eventually break out of it. So we do know that this 9800 level has been tested a lot of times, and what would be very, very bullish is if this current support levels, they continue to hold and build some kind of a structure which is similar to this, where essentially we continue to go sideways. Alt BTC, Alt USD continues to move up because Alt BTC does well on a stable Bitcoin, and then eventually we do end up making this trigger higher above 9850 and getting a bigger impulse out of this move. So for now, this fractal, in terms of what it had to do, has remained valid and is playing out. So what I would say is that if we continue to remain sideways, this would be hard place to manage risk, so you can take this breakout play above 98.50. And the other plan we have, in case BTC does not follow this fractal and starts to show weakness, is something that we will just discuss now. So we're looking at BTC on the monthly time frame, and what you can see is that price has moved higher with volume going higher as well. So this is very bullish. This is very good for the monthly time frame. And on BTC you can see that we have closed higher than the previous resistance level of 93.50. We have closed the month above that. So all in all, this is very positive. If we look at the weekly time frame, so the weekly is where price is slightly lagging, and this is the point where we understand that the total market cap chart has essentially been pulled up by Ethereum, because this week we did not end up closing above this weekly tweaks the top that we have formed at about 9700. So for now, but it is still a consolidation, because when we go down to the daily time frame, this is essentially what we were looking at, and you can see that price is still consolidating within this volume range, and we can expect some kind of a move out of this essentially within the next week, within the coming week. Price has reclaimed this channel, so it would be quite aggressive, I think, of Bitcoin if we do end up moving up. But on the daily time frame, this is the big level. I would say this is the big level around 9800, close to 98.50. And if we do end up trading higher and breaking up below this, you can expect a pretty decent breakout play with our first target as 10,800. But essentially this should get a decent reaction. There's a strong weekly level close to 11,500, so we should get a decent reaction from that level. But if we get this breakout play, this is a breakout play that is on for a target of at least 11,500. So expect a significant move out of this range that BTC is currently building. You can see that it is a consolidation, and what I would say is that this breakout, if we do not get it, then you do know that the total market cap chart has made that liquidity grab. So we can be then looking at this shape right here and expecting a different resolution on it, which would mean that we would be looking again for downside liquidity. In case this 9100 level does not hold, we should be looking at the previous, this is the monthly open in May, for price to find liquidity above this and below this, sorry. And if again you do not find buying interest over here, we would be looking at the very powerful 8100 to 7800 range. I think there is significant demand down here. So these would be, you would have to be playing level to level. Essentially the plan is to catch the breakout play if it happens. If not, then we should be looking at either retesting this level, taking out the liquidity here and finding strength. And if price continues to fail to reclaim a higher level, then we can be expecting price to come down lower. Though if price does have to make this kind of a move, I would expect it to be quite a complex structure, which would make it hard for a lot of people to get in, because essentially looking at the monthly chart, I think it is not something unique that we are doing. Looking at the monthly chart, a lot of people would tend to get bullish. So I would say if there is too much demand, we will play out that fractal and we will just not come down. But if we do start to come down, you can expect a complex kind of slow bleed, which would be hard for people to get in. And eventually when it does move, you can expect a very strong impulsive price action out of here. Also what we have is a harmonic right here. This is a butterfly. There's a butterfly harmonic with a price target of somewhere close to at least this 70 at least 8,000, I would say 7980. So stay aware of this. There is a butterfly harmonic, and if we go to any lower time frames, there is a cipher pattern as well, which is playing out currently on BTC. This is a bear cipher. So be aware of this in case, because if this cipher is manifesting, we may not get that sideways retrace, and obviously we would end up coming slightly deeper. Here the first target would essentially bring us slightly deeper, but if the cipher is manifesting, again there are two strong harmonics, the bearish cipher and the butterfly in conjunction with each other, which do reflect that it is possible it may not go completely sideways and at least come down and test this 9160 level, and we would have to see what price does, and we would have to decide what price does once we do get here and observe the reaction. So these are the key levels, and that would be the game plan for BTC. Watch for the breakout. If not, then look at the key levels that we are currently looking at. These three are the major key levels where price should be getting a significant reaction. So we're looking at the Nasdaq, which has been by far the strongest index in the world, and you would say that we are already 45% from the lows that we printed around the 22nd, 23rd of March. So we have had essentially a month and a half, essentially 45 days and 45% gain, 45 trading days, essentially an index that has been growing at 1% a day, and this is the way markets work, guys. This is the market psychology, and this is what is so special about markets, because this kind of a move, you will not imagine how many funds and how many fund managers would have absolutely missed it. You can forget about retail, but what you can see now is that we have had the highest monthly close that we have had ever on this index, and really, really bullish, the way it is shaped. And essentially, if people have any doubts whether this move to 6600 on the Nasdaq was the bottom, I think they really need to erase all their doubts, because these are higher time frame charts. They are very hard to go against, and they do not lie. So this previous monthly resistance level has now turned into a big monthly support, and where we are is this big fib resistance zone. But more importantly, on the daily time frame, this is the big level for the Nasdaq, so I will just remove this fib resistance zone for now. But yeah, just look at that. Like, that is a beautiful looking V bottom. You can see, we have had rotation going on in the sectors currently, so while Nasdaq has been moving sideways, I spoke about it, small caps have been doing very well. Money has started to move in through the value stocks, through the junk stocks, and essentially that means that the market breadth has returned. The market has agreed that this was the bottom, and we are going to be building out some kind of structure over here. Essentially, what we have is this big zone of resistance. This daily block here, it is so significant, because it is essentially what has made up one of the greatest downside moves in the history of the stock markets. This was so quick and so violent. So when we learn about support and resistances, these are the kind of levels that become very significant. A block, an order block that is preceding a move which is so big in magnitude, in terms of its volatility, this will always end up being very significant. So what I would expect is for price to build out some kind of structure before we do eventually end up breaking it and turning it into support. Because I think once we do break up from here and turn this level into support, this market will just continue to move really strong. No matter what kind of fundamentals we have, I think mentally the American population is not prepared, to be watching the stock market just blast away while they are unemployed, while they are in debt, while there is so much riots going on, because everybody has been wrongly taught that the kind of fundamentals that need to align with technicals, the only fundamentals that need to align with the technicals is how many people are on the right side of the trade, and the majority, I would say, has been bearish all the way since this move up. The bears are in complete disbelief. I'm sure there's just been margin call after margin call. If we look at any common sentiment indexes, they are still not at the highs that the sentiment was when price was here. What we do have is the put and call ratio, which has reached similar highs. So essentially the smart money has still been making some good call trades. So that is what makes me feel that it is a possibility, but this is just my opinion. Technically we are at a very big resistance level, and the put call ratio is favoring at least a consolidation over here in this zone. So what I would say is that be cautious. Nonetheless, you do know that within the technical sector we do have semiconductors, software, which internet. These ETFs are still very strong. You can continue to play the strong names because many of them have broken all-time highs. They're finding support at previous all-time highs, and they can most likely continue to show strength as long as the market is holding up. Apart from that, healthcare is another sector that has been doing very well. Apart from technology, communications is another sector that is closing its monthly charts on new highs. So you can continue to look at the stronger sectors. Last time I did speak about the small caps. I spoke about the value stocks. All of these are making very good plays. So you do not need to sit and wait while price is moving sideways. The stock market is well and alive. There is great volatility, and everything is reflecting that even though the larger caps in the stronger indexes may be reaching a place where we are concluding this big rally of 45%, and we are essentially about to build some kind of structure. There is great depth in this market, and there's absolutely a large number of plays that can take place. You can look at volatility in Tesla. I would say to look at SPCE space. I think there would be decent volatility on that name as well. So just throwing out some names for you guys to carry on looking at, and a few sectors which you can go deeper within. But essentially this market has bottomed out. There's a few other statistics that we look at just now that will reflect the same. So here we're looking at what is essentially all the other bear markets that we have had on the S&P 500, and what this gentleman is talking about is that we have had a 70% retracement from the high to the low. If you're measuring, we have had a 70% retracement, and we have never not signified this to be the bottom. Once price has come down and made a 70% retracement, we have had more than 20 occasions since the early 1900s that something like this has happened, and it has not even on one occasion been the fact that once we have had a 70% retracement, the bottom that was measured from this retracement has always been the bottom for the market. So this is a very high probability statistic, and it is very significant. And anybody doubting whatever's happening in the economies right now, whether this market can get supported, if we look at it statistically, this is very, very significant, and it is very positive. Another tweet that I want us to look at. Here's another significant statistic. This is to do with the presidential elections in the US. And what we generally have is a sell in May and go away. But what you have each time during a presidential election, this is the blue is from May to October. And essentially each time in a presidential election, we do end up having a strong period in the stock market leading up to the election. So this is another statistic that we do need to keep in mind, wherein now we are getting to that point which is very close to the elections. So you should expect the market to continue to have strength. You should look at individual names and carry on in this theme that we are talking about since the beginning. Here's a quick look at the average returns for each year, and you can see that most of it, I think this is again we have a little bit of data, but what I would say is that about 80% of the time there has been extremely positive return in this market when we do have a presidential election. The year of the presidential year has yielded a positive return. So do keep a lookout at this. It is again significant. There is a lot of narrative as to why the market should absolutely be destroyed. But what you should understand is that a lot of printing of money and a lot of small and medium-sized business bankruptcies always favor the big players, and it is the big players that reflect the market. So if your competition is getting decimated, what will happen? You will get a larger market share, and it's as simple as that. And the biggest thing is that psychologically most of the people have been left out of this market, or they have been left out and waiting to short. So essentially that has also created this big impetus and this big impulse that we have had in the broad market. So for now, again, this is another statistic that reflects that it is possible for the market to continue to at least hold up, and to not have some very, very big retraces. Essentially after a 45% move, we do have to build structure. On the Nasdaq chart, there is a yearly level which you can just rewind and look at. Essentially, if we do get a retrace, that is the significant level that we are looking at. But nonetheless, another statistic that reflects that we can carry on to have support for this market. So what we're looking at now is the average percentage change for the S&P 500, the one down here, for each month. Essentially May on an average has always yielded some kind of a selling, which is the sell in May. But we do know the presidential cycle makes things very different. It changes everything around quite a bit. April for this month, the previous April was essentially one of the biggest price gains in a single month that the index has had, I think, essentially since 2009. I think we had a 15% April, which is 10 times higher than the average. So considering that we had that kind of an April on the S&P 500, it is possible that we continue to follow this average, essentially, which reflects a potential for a sideways. And if you look at it, September has generally been a month, we look at it for the downside, May has had the highest average declines, and September and October is kind of similar to that. So in terms of up and down, May and September have been the 2 months where we've had something significant. But essentially, July has been a great month. If we look at the averages, July has the highest percentage gain, over all the other months. So what this essentially signifies is that yes, we do have a presidential election. Yes, we have had way above average gains in the month before. May has also been quite significantly positive. So even if we are to have these average gains, it would be great to be looking at the stronger and the significant names that have been mentioned, that while the market is consolidating or building that kind of structure to get a continuation, you can still play the rest of the market. So just another quick statistic I wanted you to look at is essentially how the market functions and how it works. Seasonality is a trend everywhere. I mean, we have seasons for our planet, we have seasons for our economics as well. There are multiple factors for it, but essentially seasons are seasons. And what we have done currently is we've defied this sell in May concept, wherein we have had a great April and a decent May. So if this is to follow, I mean, essentially that should be the game plan. Just to watch the individual names, watch the strength. Many good names have made all-time highs and are in a very strong trend. So just carry on with the trend, guys. Forget the narrative. Forget, at least for your economics and your economic decisions, do not base them on what you see in the media. Do not base them on what is physically happening around you. Base them on what is crowded and what is not crowded. And essentially this is still not a very crowded trade. Just to carry on trading the objective marketly. I think that is just never a crowded trade. Just to be objective and just to allow price to show you what to do. We're getting strong monthly closes after strong monthly closes across many asset classes. So just play that. It's a high time frame trend. Just play it. So we're looking at gold on the monthly time frame. We found support above the 2013 yearly open, and we've been testing this very strong level. This is the level 1770, which we're looking at for price to find resistance, and we are currently finding resistance there. Nothing too special on the weekly either. We did make a strong weekly close couple of weeks ago, but since then we have only been consolidating. If you drill down to the daily, it reflects the same thing. I mean, it's just a consolidation. This is the level where I was saying we should be managing risk. This is a good take profit level, and price is still within this level. It did reflect a bit of weakness over the last week. We are currently still building a structure. Let's quickly go to the 4-hour time frame. So we did build a flag, just quite clean, and we have broken up from it. So if we do look at the flag and its target, essentially it comes back again to this quarterly level. So I think for gold, currently upside is limited until we can find support above the 1780 level. So I'd not see, if the risk on markets have bottomed out in the long term, I do not see how strong this rally can be. There may be other factors that end up driving this, but you do have to understand that if we do have an inflationary danger, then gold will continue to give us some strength, and it will continue to be a place of high demand. We have already had some statistics reported to us which reflect that gold, physical gold has had the highest ever demand that it has had in its modern recorded life. So I mean, that is a reflection of why people are slightly in fear, that this continuous money printing is going to lead to something negative. So that is yet to be seen, but nonetheless, this is the big level to be still taking profit. If you are playing gold on any lower time frames, we need price to turn this level into support to start looking at higher prices. So here we're looking at rice futures again. This is the monthly chart. I did say we would come back during the month to look at it, and essentially you should see this is basically the monthly block that held price this entire time. Essentially we had 2 years of price action which was getting rejected by this monthly block. And if I just draw a line right at the top of this block, you can see that we have closed above this. So this is very bullish. Essentially, if you were paying attention last month, last week there was a decent entry for the rice futures, and we have made a really nice move out of this. It's about a 6-7% move over the last week. So congrats if you were paying attention and you ended up catching this move with us. So in terms of commodities, I believe it is one of the strongest moves that we've had. We had nice consolidation and a good structure outside of that. So this is a very nice place to manage risk for upside on this commodity. And essentially what we have done is we have printed one of the strongest candles and a very good structure, and we're breaking out of a zone that has been held as a resistance for quite a long time. So this is very positive, and essentially we should be looking for continuation. This has been a very big move. If you do not watch these kind of markets, you should know that this is not very frequent. So after such a big move, should expect another kind of structure to build up to manage risk for further upside. So here we have some more statistics for demand on oil, and this is essentially road congestion on major cities. What we're looking at is China, few Asian cities, the US and Europe. So what you can see is China has fully recovered. Essentially the average congestion in 2019 and the week ending 24th May, you can see that Shanghai has already gone above. So not only is it normalized, it has you have a fully functioning economy right here in China, and Guangzhou a little bit more affected. So essentially showing something similar to Europe, but you can see Germany has recovered very well. London still struggling, Russia still having a lot of cases, so not being able to catch up. The US now currently, along with the virus, we have the riots going on, so you would not expect this to recover until that is resolved. That's another factor. But you can see some other places in Asia that have again recovered, and essentially China is a big consumer of oil, so that is the reason we've had a very strong recovery in oil prices. You can see some other places like Jakarta, India still struggling, not even close to the levels that we have had in terms of demand. But a lot of economies are opening up their lockdowns, because they do need to function. So we have to see how eventually you would expect all of this to continue to improve over the next 2 to 3 months, and essentially which would give us nice demand in a lot of sectors. Essentially most importantly oil, which would mean oil prices should stabilize and build some kind of structure for a continued uptrend. So looking at oil, we've had almost 90% month. So this month of May has been absolutely spectacular for oil, and currently we are at a major resistance level. So what I would say is at least we should build some kind of structure before continuation. But since we would expect demand to come back, we should expect oil to go back to its normal levels within the next 2 to 3 months. We should expect oil to start trading in the high 40s, and essentially this would continue to be volatile as long as the virus is playing a role. Currently a lot of economies are opening up, but if you would see any big economies getting affected and the infection rates going higher and getting further lockdowns, you can see more volatility in oil. So for now, it's a great commodity to continue to trade. It is trading very true. It is building patterns and following through with those patterns very cleanly. You can see consolidation and a break, consolidation and a break. So just continue to trade this asset. I think it is very volatile, and you can take advantage of that volatility. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!